Now it is. Now it's going. Good catch. It works now. Yeah, so it was interesting. Monday, you took almost the exact same trades as I did. Almost the exact same. I I skipped this one because it was just right at the open. You had a nice second entry here, though. Nice little pullback there. First trade was really nice. Second trade was, let's see, come on, mouse. 1, 2, 1, pull back 2 here. Still logical. We touched the line just fine. We had some push up. Just a little bit unlucky there. I believe I also took this trade. Pretty sure I did. And then we got into channel fade. 1, 2, failure. I did not take this channel fade here. I just didn't feel like there was quite enough strength. Although if you look at it, there's still good evidence. It's a higher low. You know, signal bars, it's all right. It's kind of gray, but I mean, honestly, it's relatively logical to take that there. You used an extra wide stop, didn't you?
It looks like I took an extra point, yeah.
It's all good. Sometimes you can do that. As long as you're still, you know, within the risk to reward parameters, you can do that. And a short failure there and a success there. Let's see. 1, pull back 2. So did you have this range line drawn here?
Yes. Before that, yes, for sure.
Okay, gotcha. And this one, 1, 2, pull back, 1, pull back 2, gotcha. And a nice entry there. Yeah, you knew we were short. It was just kind of a question of when. And so, but you know, you've shown this before how you can miss or lose something here and then find something just as valid and get back in. And he had a nice trade there. So, if you took this, we have this range here. This is technically a range fade. You took this entry here. Where is our profit target?
I wrote the note right there. It's the bottom of the range. That's why I was weary, but I decided to hold for the low.
For the very low. Gotcha. It's fine to do that. I mean, obviously, it worked out really well for you. Uh, I probably would have trailed the bar or taken the profit at the low just because you never know. And I think that this same situation happened to you later in the week and it didn't turn out quite like that.
I think you're absolutely correct.
So it's okay to just take our profits here at the low. I really am glad that you made extra profits, but we got to keep in mind our profit target. Because sometimes, you know, sometimes we get really big winners. Like you've seen, you've had several of them. In fact, you had another one this week, one or two at least. But we can't just assume that's going to happen every time. Because most of the time it won't. It's just really nice when it does.
So a little bit lucky here.
A little bit lucky, but you're going the right direction here, and you figured out the direction really quickly. Also, you know, if we look at these trades, these are all really logical, really good trades. This touched the channel line, went back up. You took a position here. It ended up pushing up a little bit more, a little bit extra for you. Another logical position here. Even this channel fade right here, there's logic to it. And you were just a little bit early there and then dead on there. So there's a lot of, I can see a lot of changes, quite frankly, in this chart with you. Definitely a lot more, I feel like there's a lot more calm in it. And there's nothing in here that's being over traded. And you were very patient right here, especially. You waited until it touched the line.
Thank you for that. And then the last thing I'll mention with that profit target you would have taken at the end. I remember watching this and seeing that push up at the EMA. Like it was pretty strong, and I was considering, I guess.
Excuse me. Yeah. I
Don't
mean,
joke on me.
yeah. I'll try not to. Wow. This is a pretty strong push up, and if you were a bull, excuse me, if you were a bull, this is your range, and I would actually probably dare to say that the range is closer to this. If I can get it kind of straight here, closer to that. But that's fine. But if you were a bull, where would and you wanted to buy soon, where would you buy at?
Yeah, bottom of the range.
Absolutely. So,
Yeah.
of course, that's what you're thinking. That's what everyone else is thinking too. So there's going to probably be some kind of a reaction there. We don't know if it's going to go back up, if it's going to go back down. We don't know.
Awesome.
Okay. That was 6.
That one's 7.
Okay.
Looks like I took a fade failure, and it was followed up by another fade that worked out. But we agreed not to take second fade attempts, so I passed it.
Great. Good, good. Sometimes a second fade attempt will be a measured move, and you can see like a measure, break, measure, or a channel, break, channel, where the length of one channel, you'll have a channel, you'll have a range, then you'll have another channel, and each channel, the length of them is the same or very close to it. Don't really have that here. It's kind of tough to really determine an actual measured move. In fact, I don't think that there is one in here. But sometimes we will have a channel like this, and we'll have a channel down, and we'll have a range, and we'll have another channel of equal length down, and that will create a level of support. Obviously, it didn't happen there, but sometimes that does happen.
So you're saying with that level of support, it would validate another, I guess, not a fade, but another entry?
Yes, it would, and the channel could still expand from that too, just depending on its size. It's it's a measure move I detail in my new course that I'm going to release. I'm not going to do it on Veterans Day. I've decided I'm going to do it, or the weekend of. I'm going to do it probably on Monday or Tuesday. Release my course, but I do talk about it there and how you can find those measured moves. But they do happen, and they can create another place of support to buy and then have another push up.
So this second fade was just miraculous.
Yeah, I mean, it's just the market. You know, someone, don't know who, someone decided to buy right there, and it was enough to buy to move the market up. You could think of it like a double trap, because I mean it kind of was really. You have 1, 2, and then 1. You could also think of it, maybe we break the channel here. There's your fade attempt. Once again, there's a lot of logic to it though. It's a lower high, just happened to not work out. But you know, once you're in here, start to look for longs like you did.
Yeah.
And that was your big winner there. No, you did the right thing here. You know, you can call this a double trap, and I think you'd be right in saying that. It's really hard to catch, and it's not something that I don't think I would really expect anyone to catch very much. And then your next entry here, like I said, is logical. High is a lower high here, entering short, still logical. Push up, and the cool thing about using strategies like this that maximize your profit so well is you buy here, you sell here, and not only does that wipe out all your losers for the day, it makes you profitable in one nice trade.
Yes. One last question, which is going to lead to my next chart also.
Mm-hmm.
Okay. I did not see that double trap because I drew that channel line going down.
Mm-hmm.
Do you think? Because I kind of took it like you drew your channel lines immediately, and then you would expand them. You'll see with my next chart, I draw my channel line, and do you think maybe like the channel line wasn't valid? Like, not that I should have caught the double trap, but yeah, was it valid or not?
I think it's valid. I think that maybe, and now that you bring attention to it, I'm kind of looking at it a little bit closer. Maybe we could draw it a little differently, though. Maybe we could draw it, and we'll try to be very, very straight. No guarantees, but maybe we could draw it like this. And then it expands, and that might lead 1, 2, but your results are still the same.
Interesting.
You know what I
Why
mean?
would you draw it like that?
Well, if we draw it, let me get my settings going here. So sometimes we can draw from the high here, but sometimes if we move over a little bit, there's a lower high, and that is also a really good place to draw the channel at, because we have two different ways of looking at it. We can now look at it in a steeper fashion.
Yes.
If we look at it in a steeper fashion, if we take out the whole market and say that anything from this vertical line to the right doesn't exist, anything to the left of this, if I can draw this, anything to the left of this line, none of that exists, none of this exists. What is this right here? What does that look like to you? Is it a trend? Is it a range? What is this? Just this area here.
Yeah, it's sell off.
It's a sell-off. It's trend bars. It's a breakout. It's, there's lots of different ways that you can describe it. And so it's nice and steep. And so we can draw it like that too, because that's really what's happening. Your logic here, it's not invalid, because we can see that we had bears try to sell here. But I probably would have taken it here and drawn it real steep. Let's see if there's another. I'll try to look for another one in our charts where I can kind of
Would
show
you
that.
have taken that fade?
This is Tuesday, right? Yeah, no. So I did not take that. I don't remember taking this. No.
Okay. Which the channel thing is gonna lead me to the next chart. That's my first question.
Oh, okay.
Yeah, thanks for the steep channel explanation.
Absolutely. Yeah, check that out, because a lot of times if there's like, a high, we'll do it like this. If there's like a high, draw it. If that's a candlestick and that's a wick, and then you have, candlestick with like a shorter wick, we'll do a wick like that. Sometimes that's going to change your angle, just depending on where the next candlestick is. It can be this right here, can be a wider angle there than something like this. This can go down pretty steep here, just depending on where the next bar is.
Go for the steeper one.
Go for the steeper one. If it's a breakout, go for the steeper one. If it's like kind of rangy like this, then reconsider it. But yeah, generally, because the thing about our market cycles, we have a breakout, and we have a tight channel, broad channel, range, and then we repeat itself. So this is also according to our market cycles. We say that, oh, well, this is our breakout. We're in the breakout cycle.
Okay, breakout, tight channel, broad channel, range, breakout.
Absolutely. Here's another one. At first you can draw it. Come on. It'll probably pop up in a second. At first you can draw it super steep. It's almost not worth drawing because it's so steep. But then we can take it, this lower high here. See there, they all just popped up. You can take this lower high here and you can draw it here, here. You can see in this situation it just changes them a little bit.
It changed a lot actually because that answered my question with my entries. That answered my question.
Did it?
So, but we'll get to there. So, like, yeah, I took a long entry. I skipped the first one. I just trailed it right at the top, and it dropped. It's a good thing I trailed it. And then my question here, I took a fade failure. My question was the count. I have a first entry short, and then I reset the count because of my drawn channel. So I have first entry short again, second, and it worked out. But that first entry at the top was actually second entry short.
Because of this right here.
Yes,
yeah.
Because if I draw my channel more steeper, like you just explained, that would have been a second entry.
Yeah, you're right. That would have been. Mm-hmm. And so you would have had a little better position, but it did work out for you.
Yes.
Yeah. Once again, you waited until the bars are touching the line, which is really good. Nice trail there. I guess you had your original trail here, and then the market pushed up, and then you trailed by the bar.
Mm-hmm.
Nice, very good. Yeah. So I would say, looking at your charts here, I would say, well, let me ask you this. Let me see what you think. Out of all the trades that you're making, which ones fail the most? Are they ones taken at channels? Are they fades? Are they ranges? What do you think they are?
Well, I already defined which ones are my winners, but yeah, you're right. I should define my losers too. My winners, my best ones are channel touches, channel fades, and double traps. That's what I trade. Those three.
You trade them really well too. I would say on your channel fades, just be a little bit careful about them. If we have a broader channel, it's a little bit less likely that it's going to fade, or if it's really broad, then it might not be an actual the very next second entry. But smaller channels like this one right here that you drew, this bear channel, this right here is a tight channel, and anytime we have a tight channel, we expect it to go into a broad channel. And so your fades 1, 2 here. Now you have your broad channel and you have a really nice winner. So keep in mind that your fades are going to be best with your tighter channels. Your broader channels are going to be generally a little bit better if you're going to take a fade. If it's going to be channel, break, channel to a point of support where you'll look to buy. Those are generally the better ones for broad channels.
Okay, could you please elaborate on the broader and tighter channels? Were you meaning on the channels that the price is coming out of, or the channels that are being formed?
The channels that the price is coming out of. Mm-hmm. So, first off, what is a broad channel? How can we define it?
My first thought would be I'm going to ranges when you say a broad range, so we would have profit targets and losses. So I'm thinking a broader channel would be like 8-point channel.
Well, it would really depend because there's no rule like this many points is is your broad channel. Your broad channel is simply what the average of the market is doing. Because think about the market cycles, right? We have breakout, tight channel, broad channel, and right after broad channel is range. So we go in the last several days or however long, we find out what the average broad channel is. We take that average and we know that, okay, if I don't know how long this is, but let's just say it's a 10-point channel or a 15-point channel, whatever. You say, okay, well, I know that I'm at or around the average channel size here, before it starts to either change or convert into a range or something like that. And so, was that raise or lower the probability of a fade winning? If this is the average before we convert into something else, it's going to lower the probability of a fade winning. But when we have newly developed channels like this one here,
Got it. I got it.
fades become a lot more effective
Hmm.
because now we're going from a breakout here. This is our breakout area in there. And get rid of some of these lines. Our breakout area in here. We have our pullback, 2 consecutive bull bars here. Another push down allows us to create our first channel. Pull back, 1, 2. Now we're fading this brand new super tight channel, and it expands into a broad channel.
Oh my gosh, Nick, what you just said was just genius.
It's pretty mind blowing. And look what happened after that too. The market broke a broad channel, and now it's starting over again. Now it's in the breakout mode.
Wow. That is brilliant. I'm going to have to rewind this and listen to that 3-4 times just to burn that into my mind because what you just explained and elaborated on was just the key inside my mind. So thank you for that.
Absolutely, dude. The biggest thing is, what is the average? What is the average channel height in the last couple of days? And that's going to tell you if your fade is going to be more or less reliable.
Last couple of days, not just that one day.
Yeah, last couple of days. And you don't have to go back and look at every broad channel in the past week or something. I mean, just 2 or 3 days is fine. If we're in a range, then and then we break out of that range, then maybe you want to reevaluate where what your average channel is, because we're coming into a different cycle in the broad spectrum of the market. But yeah, just go back, kind of find out about what the average is. It'll help your probabilities just a little bit.
Mm-hmm. Brilliant. So those out of my winners, you'd say that probably the fades would lose more often.
I would say lately, from what I've seen, your broad channel fades have been losing more often. Not saying you shouldn't take them or anything. Just be aware of the market cycles. Fading the tight channels is always going to yield a higher probability than fading a large broad channel.
Brilliant. We're gonna on my Friday chart. There's a perfect example of this. So
Awesome.
Thank you for all your explanation here.
Absolutely. I did want to comment to your trade right here. You said you held that for an hour.
Yeah.
That's pretty intense. Good hold. I probably would have taken profits a little bit sooner, especially by here you definitely know that you're in a range. I probably would have taken profits here, but
yeah, I would have made more.
That's one hell of a hold. I do congratulate you for holding that for an hour and being that disciplined.
Yeah, and side note, not that it matters, but from that entry, if I just held all or nothing and walked away to the grocery store like Bernstein or one of the guys, this dropped another 20 points.
It's just it's crazy to think about. It really is. Some people trade like that. Some people, they'll buy or sell at the beginning of the day, and they'll walk away. And if they win, they win. If they lose, they lose. People like that, they generally, whatever they put in, they're okay with losing all of it.
Also, but it did drop 20 points, but it also depends what time you come back. Let's say you're stuck in traffic or whatever, and you're not watching it.
Mm-hmm.
It dropped 20, but then it reversed 10, 15 points.
Yeah, I mean, that's something else to think about, too. That is something else to think about. What if you get stuck in traffic? Oh no, I gotta close a trade.
I've seen some people do things on their phone, but I've also seen a lot of slippage and mess ups on that.
Yeah, it's your phone is fine to just look at and get a quick glance of things, but when it comes to real trading, I take all my positions from the computer.
Yes. Yeah. So like the signals group, you take the position from the computer, but you could like tomorrow or whatever, just look at it 10 minutes on the phone.
Yeah, absolutely,
Okay.
absolutely. I mean, hell, dude, if you really wanted to, I guess you could trade the trade space signals on your phone. Just frankly, professional traders don't do that, and they don't do it for a reason. So
Yeah.
I want to be a professional, so I'm not going to do it.
Okay. We're not amateurs here.
No, absolutely not. Great job today, man.
Thanks.
Okay. This was Thursday, I think.
Yes.
So entry long. Why did you enter? Oh, because of this here.
It was a fade.
I got you. Yeah, we
But it
okay.
was a broad channel.
I'm sorry. What was that?
Sorry to interrupt. I'm thinking now it was a broad channel. If you look at another, I'm sure I sent you the major chart in
Yeah,
the email.
it
Take a
look
peek. I'm sure.
it
I
looks like
guarantee it's a broad channel.
it looks like a broad channel to me.
Yeah.
And we do have here's the thing about taking this fade too. It does form a bit of a shelf, which is nice. It did get a little bit of a profit, which is nice too. But I mean, look at all these bear bars, dude.
Mm-hmm.
So many bear bars to go up against. So something to take into consider too. I won't go over that. We talked about that.
Um, you mentioned a term, shelf. What's that?
Well, if you look here, you can just see like there were buyers here, and it bought that up some, and then about the same area there were some more buyers. So it just kind of forms like a little shelf, sort of, right there. It's not like really a range; it's just kind of a shelf in a way. Maybe if you wanted to get if you wanted to get real
Wall.
technical, maybe it's a 2 or 3 bar range. But
Hmm. Yeah. I guess
so
I would look at it as like a wall.
a wall,
Yeah.
interesting. It's an
That's
interesting
how
way
I
to
would
look at
think
it.
about it. When I actually, yeah, this past week, I would think to myself like, is it coming up on a wall or I would think that. I don't know.
Interesting. That's an interesting way to think of it.
Yeah.
But
Oh yeah, I never mentioned it to you. Like I also started to think about these charts. Like I like in all this white space. I imagine like all that there's orders just waiting to be filled in all the empty space,
oh, absolutely. I mean,
and they're just like surrounding the price, like just waiting to be eaten.
yeah, it's absolutely what's happening. And just think about it: the market will be here, and there will be limit orders up here, just sitting and waiting. There'll be limit orders down here. There will be people buying and selling the market at the price. There'll be people trying to enter one tick above, one tick below. There's a lot of orders on the board.
Yeah, I've also treated like my channel lines like in my mind. I've thought of them as walls also, like it coming
Interesting.
up against the wall is break through the wall.
Fair enough. They are very wall like. If you wanted to know how to be profitable pretty much all the time in the market, all you got to do is figure out where these limit orders are and buy and sell there. But of course, we can't do that.
Interesting. That just shot me back to like one of my like when I first started like 5 years ago. One of
Mm-hmm.
my teachers, he started out like he was an older guy, so he started out on the floor in the stock exchange,
Mm-hmm.
and he would say something about like he would pay attention to how people were placing orders, and he would say like whenever someone or something happened and like they'd be like all these sell orders would come in, he would just bounce off of it and just be like place a sell order for me, but like on the floor. So like I guess he was just bouncing off of what you said, like limit orders. I guess he was anticipating bigger orders coming in or
Mm.
something, and just would jump on that for what he was doing. I
He's
guess.
like trying to figure out where other big people are buying and selling and buy and sell at the same place as them.
Yes. Yeah. I don't know why I just thought about that, but it just.
I mean, honestly, that's really how you make money. Like, just think about it. If you had some sort of indicator, some sort of magical indicator, and this magical indicator told you where the major 10 or 15 or 20 financial institutions are buying and selling, then yeah, it would be pretty hard to not make money. You know what I mean?
Yeah, because last thing I would say about that, he was telling me like he was looking at like the stacks of orders
Mm-hmm.
on like I don't know if it was like desks or however they work or whatever, but he would just look at the stacks like coming in and like pretty much how everyone was processing stuff, and he would jump on that.
That's really cool.
Um,
Floor trading back in the day is really, really crazy, man. I've seen, a lot of video of like dudes with two phones to their ears, like talking and having one conversation with two different people over two different orders, and things were crazy back then.
yeah.
You also had to be rich to do it because commission, there'd be like $400 a trade commission.
Mhm. So we're definitely privileged too.
We are very privileged. Very, very privileged. The market is more accessible now than it has ever been in its lifetime.
I'm grateful.
Me too, because I don't think I could be a floor trader.
Yeah.
So you took this fade here, it failed. We probably could have had a little bit better signal bar here.
Okay. Could you? Okay. There's two things right off the bat that I already know I have to learn more about, like
Mm-hmm.
in our future classes. One, one, when you talk about signal bars, I don't have like a clear understanding on that when
Okay.
you talk about it. And two, when it with measured moves, like I know what they are, I know what they look like, but when I'm trading, I don't think about that at
Mm-hmm.
all. And I want to add that to my arsenal. So those are two things that like you talk about frequently that haven't like solidified its place in my head.
Gotcha. Well, for I have a video on measured moves. Like I said, I'll add
Okay.
your email so you can actually view the course. Um, and I feel like I have a fair bit of material on measured moves. I feel like the videos can explain it pretty well and
Cool.
pretty quickly. But
Awesome.
our signal bar, remember, all a signal bar is any bar on your chart can be a signal bar. Any of them. A signal bar doesn't necessarily look one way or the other. It just is. So because you took a trade here, one tick under this bear bar right here was your entry bar. The previous bar was your signal bar.
Yes.
And this is the case in all situations that you enter on. So what you're saying by entering this trade essentially is that this signal bar has given you enough information to say that there are, at least initially, sellers in the market. And because you feel like the result of this bar has proven that there are enough sellers in the market that you're willing to enter one tick underneath here if you get filled. And of course you did there. So what our signal bar tells us is our signal bar is the initial buyers or sellers. Let's look at another one here. Let's look at this one. This is actually a pretty good signal bar because there were sellers at first, and the buyers bought it back up, and it had a close at its high. Really, really good signal bar here. Um, Something like this, not so much. There were a little bit of sellers at first, and then it got bought up. And then the bears, they just took it kind of halfway here, just to its halfway point. So it closed bullishly, but wasn't super strong bullish, but it also wasn't super strong bearish. Um,
God.
so
Okay.
read your signal bar. That was one of our adjustments that we wanted to make to kind of clarify some of these trades a little bit better was to get a good signal bar. Probably could use a little bit better than that, but you're getting there. You're close, especially if it was like a tiny bull bar. If it was like if the body was half this size, I would say that's still a good signal bar. Still really weak for the bulls.
Roger that. Okay, so yeah, I just correlated signal bars with the size, but now I have to
Yeah.
add what's I guess the context.
Yeah, the context and your signal bar is always going the best ones at least are always going to be in the color of the direction that you want to enter.
Boom,
So,
that's key right there. That's a bomb.
yeah, this one right here, it's a really good signal bar because it has a strong close and it's in the color and of the direction you want to enter, which is long. So, good signal bar, you enter long and go from there.
Roger that. Thank you.
And let's see, I did want to. This is a really cool trade right here. One pullback, two also kind of forms a little shelf. You might could say that you're kind of trading in barbed wire there, but it worked out nicely for you. And if you look back just a little bit, this bar pushed up, hit the 20 EMA, and had an really immediate rejection from it. And so you can say in taking this trade that we have already tested the 20 EMA, and so that can also bring validity to your trade there. Nice little trade here. Um, Still logical, even though, like I say, we probably could have used a better signal bar. We talked about that one, and this one yielded you a nice profit too. Took
Yes, that one worked out.
right at the low. Nice. Great job, dude. Great job.
Great explanation.
I've, have you noticed this week with your trading? Because I've noticed it. You'll go. This is what trading's all about, in my opinion. You'll go, and that one was break even. This one was a loser, and then just boom, out of nowhere, you make one big trade. One big trade can fix everything, and it happens every single day. So you've been really, really good at catching those this week. So congrats to you for that.
Thank you. And isn't it interesting how at the top, how the price touched the broad channel
Mm-hmm.
and bounced off of that?
Mm-hmm. Yeah, that's not it's not unheard of at all. Just a direct push down from it. And I mean, any time that you do have this channel here and you see price went up and touched it, you know for a fact that you're in short now. I mean, it's real obvious, and obviously you did. So,
It
yeah,
came up on that wall, resistance.
yeah, it did. Sure did.
Thanks, Nick.
Good job today. Okay.
There's going to be a big learning lesson here for this next chart.
Is it 9, I
Because
think?
10, we're on 10 Friday.
Oh,
And it's going to be a big lesson, not just for me, but for the audience, because it wraps everything we did this week. Channel fades, channel lines, skipping opportunities, signal bars. So this chart is going to have everything right in it.
alrighty. That it is. Okay.
Right off the bat, I skipped the first fade because I felt like the push down was really strong.
Sure. That's fine.
And it was profitable, but looking at it now, maybe I was coming out of a skinny channel. Maybe it was a good fade to take.
It is also a little bit scary though, because you do have a lot of you have some relatively good bear action in here. I don't think it's. I don't know. I don't know. It's pretty strong. These bull bars don't really go anywhere, so I don't blame you for not taking something like that. It's a tough one to take. And then we're at the
I had
high
a
of the.
I had break of an OG channel line. So I had a major channel line coming from a top all the way down to that light blue line that I drew. So then I tried doing like a fade to the downside.
Oh, I see. Okay.
Yeah.
So you had that channel line. So we're in a really broad channel right now. You have this channel line. Wow, it's not even close to straight. You have 1, 2 here, and it's really just bad luck, quite frankly.
Yeah,
Yeah, just like one tick, bad luck. Um, let's see, in there, out there, and then you reverse to long.
Yes, because now I saw this is where I was confused because I'm seeing like long, short, all these channels coming together,
Mm-hmm.
and I'm losing one, but then another opportunity the other direction is coming in. So I was taking a lot of things, but here, after the short failure, I saw that it was like a one tick stop out, but then I was like, oh, maybe it's long because it's coming up on the broad channel. So I decided to reverse my position and go long.
Gotcha. So you were basically confused which channel was more valid, this one or this one.
Honestly, yeah.
Gotcha. I get that, and sometimes crossing channels like that can be confusing. Don't be afraid to walk away and let the market choose for you.
Mhm. Yeah, this looks like a like in a big intersection. Like I don't know if you've seen videos of like an intersection in India where like everything's running through.
Yeah. They like honk when they come up to the intersection because there's no stop signs.
Yeah, like the first 4 days of the week, like I could it was clean, you know.
Hmm.
But this Friday, it was just like every traffic all over.
I understand that. So this is your channel line for the 2000 tick, and that's kind of where we were right in there.
Yes. Yes.
I gotcha. Yeah, so this is really, really broad. Yeah, just
Uh,
just don't be afraid, especially if it's something like this. If you're just stopped out by a tick or two, if that's all that happened, you don't know for a fact that you were wrong necessarily. There's the market has not proven to you that you were wrong. Now, if you took a position here and the market, went down and then just went whoop like that, then obviously you were wrong. Uh,
uh-huh.
but there's no guarantee if it's just a tick or two. There's no guarantee that you're wrong. You're just a little bit unlucky.
Okay.
And so I don't really think that the long was needed there. I think that you should have just waited on your hands or just gotten back in short. Let's see.
Okay.
One, two, here, pull back, one, pull back, two. That's kind of a tough one. It looks like there's probably a lot of risk on there. But then we have one, pull back, two. It's also kind of a tough one to
Yeah.
enter. But you could
He's
have,
sitting.
but you did enter there. And we kind of got into a range. So yeah, just wait for other opportunities later on. Let the market show its direction. Okay, then we have short entry here. Did you know this range was here?
As it was playing out, I was fishy, and then I did draw it out.
Okay,
But I still did not like how it looked. It was a lot of intersection.
it is a lot of intersection, especially in areas like this, like this. Long wicks like this make things hard. Long wicks like this, like this. All those wicks are so
Oh my
long.
gosh! When I was playing out, because I right there at the you see I have the 2L. I was considering a fade there. Once I saw the Wicks doing that, I was hands off.
You were
I was
like, geez, this is ridiculous, huh? Yeah. If it's long wicks like this, it can mean chop. And, we have big bars that don't go anywhere, climactic bars. That's all signs of ranges and or chop. So be real careful in those. So you
um.
got
Go
stopped
ahead.
out here.
Yeah, I was gonna say I took right here at that short. I was confused on whether to respect that channel line going down that I have that looks valid because it's touching wicks and touching bodies.
This one.
But I also yes, and I was also respecting the EMA because we have a double touch of above the EMA. It just looks so clean
Hmm.
and that signal the signal bar. Yeah, you're right. It was a wick, but it was like my entry was perfect with the channel line. You know.
No, absolutely. And so you were basically at this point here, you were hoping that it was a channel and not a range.
Yes.
and it
Yeah.
was just going to go
Sure.
down like that. I got you.
Sure.
The issue with that reasoning is we have two and really maybe even three here uh, places previous that we have that we've touched. So there's been a lot of reaction to this. Let's see here. We touched here and we had a bull bar closing at its high. We touched here, we had a bull bar closing one tick underneath its high. I would look to take profits here, taking
Mm-hmm.
this trade, or at least like a tight trail.
Okay.
And you see what I mean, though. It's just the only reason for that really is because we have at least, this is a little bit subjective, I think, but we have these two spots right here. These two spots.
Yeah.
These spots are their previous bullish action. We know that there's bulls buying here. We don't
Yeah.
necessarily know that they're going to buy here this time, this third time, but they did both times before, so we're going to assume that that's what they're going to do.
Okay. So valid short, but be extremely wary of the range and take profit.
Yes, absolutely. Should have taken profits in here, or trailed, or moved to break even, something like that.
Roger
Because
that.
because of the previous bull buyers here.
Roger that. Thank you.
And here I can see where it can be confusing too, because you're like, well, is it a channel or is it a range? And it kind of ended up being a little bit of both. Here's one, two, took this short here. Or no, you took this. No, that was getting stopped out.
I actually, reset my count because of that channel line. That channel line made me reset my count.
Gotcha. Well, it worked out for you. And I mean, either way you look at it, you're at the top of a range here.
No,
So
that's actually that. I stopped out the -2 points, and then I entered short again at the bottom of the range, and I knew it was bad.
yeah, see, I would have. This is where you should have entered, right in here, right?
Yes, but I messed up my count because of the channel line.
Or maybe in here, one of the two. Yeah, I got you. One thing we cannot do though, we cannot be entering here. I'm glad that it you wasn't a loss, but I mean, we can't have our stop loss in the middle of a range. We just can't do it. We're just asking for it to get hit.
Um. Okay. Okay. Would you say that and put that? Okay. Okay. What's that? That entry, that place you said you would have entered. Would you say that was more range or a channel fade?
I think that it doesn't really matter how you look at it. It's the same thing. If you looked at it from a range, you say, okay, there's second entry in here, 1, 2, 1, 2, 1, 2. That actually would be a 1 pull back 2. Well, no, that was where your second entry was. So hold on, let me double check my count here. 2 pull back, 2 pull back, 2 1. Yeah, so this is a first entry here, and that was your second entry. So it looks like you were right on your count, no matter how we look at it, if it's a range or if it's a channel. Um, but this is the place where we should be looking to enter. If it's not a second entry, we don't enter there, obviously. But this is the area that we should look to enter. Because if we put our stop loss, let's just say we entered here on a first entry, if we put our stop loss on the board, it's way above the range here. It's way outside the range. If we put it here, then our stop loss goes here, and it's in the middle of the range.
Okay, so it doesn't matter if price was dropping, if it was touching EMA and continuing to drop, and it was the bottom of the range. I shouldn't be entering.
Yeah, not short at least. If you enter long, I mean, your stop loss is outside of the range, so at least if it gets hit, then I'm not saying you should enter long here, but at least if it gets hit, you know that you're wrong. You probably should have also trailed. You did enter here, and it was a winner. Um, we have our first pullback here, and I guess you did not move your stop loss because it did not make a new low here. Is that right?
I was anticipating like the low of the day.
Low of the day. Okay. Well, somewhere in here we should have moved our stop loss at least to break even. We can think of it because we made a new low there. We can just move it to break even here, or we could say maybe that's where we want to put it. We had a push up here and another push down, so maybe we want to move it here. Had another push up and another push down that made a new low, so maybe we want to move it here, and so on. So
Okay.
you should have had you should have trailed it better, especially with where your stop loss was. And I see that you broke even here, but you should have trailed it some more, because we have these pushbacks, and maybe you don't actually want to put your trail on until here, because we have these much clearer breaking of lows. But you should have had your trail in here somewhere.
Okay. Okay. So yeah, I definitely wasn't paying attention to the breaking of lows. I was paying attention to like the EMA touches, like it dropping.
Gotcha. You were like touching here and touching here.
Yes.
I gotcha. Yeah, I mean, EMA is a good thing to watch, but it's not everything. EMA is just a tool that happens to be on our chart. That's all it is. Every now and then we get it out of the toolbox, but a lot of times it's just left in the toolbox.
So in this scenario, because well, first it's a skippable trade, but if I was in it, trail it tight and pay attention to the lower lows as opposed to the EMA.
Yeah, absolutely. Once we start to make lows, especially breaking this here, we should begin to trail. We should begin to trail the highs here. We had a push up and we had another low here, which got broken by a tick. My line's too thick, you can't see it. Got broken by a tick, so then we can lower our trail one more here.
Got it.
Okay, you got break even, and then failure here, and a failure there at a broad channel, and then called it for the day.
Yes. Okay, so the broad channel one, maybe you skipped that one, the second one, but the first one would you say that was a valid fade?
I mean, I would say that they both are. This is a place where the market might go lower. This is also a place where the market might go lower. I would say that they're both valid, especially this one. What do we look at? Lower high. Okay, signal bar. Not so bad. It's about a 50% close. You could take that if you wanted to. Honestly, it's really not a bad trade. We're at a key entry point. If we go a little bit further here, we have, let's see, we have our first, let's see, what do we have? 1, 2. We have 1 and 2. This would be the second one here. This isn't bad either. I mean, if we look at it, we have a bear bar, and we have a second bear bar, and then you look to take a position. It's just unlucky.
Okay.
I would say that they're both valid, especially, I mean, you don't just have one signal bar here, you kind of have two, in a way.
Interesting. Okay, so in this chart in particular, skip the range one, skip maybe the half range channel one.
Skip
maybe.
this. This one is profitable. That one should have been a profit. Even if you took this, you should have made a small profit there. These are fine. Nothing wrong with those. And then over here.
And with the one tick stop out, don't be so quick to judge myself thinking that I'm wrong.
Yeah, if it's just by a few ticks, that you're not necessarily wrong. You might just be unlucky. This was a valid trade, and then your very next long here, you need to skip.
Skip that one, even if it touched the channel line?
Well, you need to wait and see, because we have this channel line, But we also have this channel line. So it's probably best that you just wait and see. This channel line right here is the major channel line. This is what is pushing most of price at the moment, at least. And when the past times in this channel, um, this is going to be more valid than this or this here.
Okay.
So we have to wait and see what the market does, but it's probably going to go short. It's probably going to go short. I mean, it has in the past, so until it goes long and proves us wrong, then we're going to assume that it's short.
Good. Yeah, it was just that push up, that strong push up. It just made me think maybe it could break through the wall.
It looks really convincing, especially in like broad channels. But those big pushes up is why we can make money going long in broad bear channels, even though it's not necessarily something we should do. It is possible. But as soon as we get up to this channel line here, we need to flip our thinking. And if we had just flipped if you had taken this and you had been like, okay, well, I'm wrong, I'll wait for another good one, then you can wait and see what the market is doing to help prove your theory right about what's happening.
Amazing. Thank you so much, Nick.
Absolutely, man. Absolutely. But good job this week, man. Overall, there's a few spots on Friday, but you were really killing it Monday through Thursday for sure.
Awesome. And for the people watching that want to join your signals thing or your course that's coming out, any updates?
Yeah, so I'm going to release the course early next week, Monday or Tuesday. I just didn't want to do it on Veterans Day weekend. And on my signals thing, my signals group will be released probably Wednesday, Thursday, or Friday later in the week. And the course, I think, is going to be $200 just for the course. And then I also have options to have time with me, like what we're doing here, so that I can explain things in detail. And for the signals, I'm just doing a straight $125 a month, and it gives accurate, reliable signals based off of over 40 years of historical data for S&P 500 assets, over probabilities, average stop, average take profit, and things like that in the signals group. So you can know the probability of your trade before you even enter into it. It's a very cool thing to have.
Amazing. If you want to be successful in trading, definitely get these courses and programs.
Absolutely, without a doubt.
Thank you again, Nick.
Charles, you're the best, man. I appreciate